Are you ready to go from this to this? Are you tired of missing out on the perfect entry price in your trades? Do you wish to know how to catch those market moves right at the very sweet spot? If you always wonder when would be the perfect time to pull that trigger and enter a trade, then you need to learn the 4 sniper entry steps that I will be sharing right in this video. You are welcome back to my channel, and if you are new here, I'm your host BB Forex, and I like to share trading tips, strategies, and knowledge to make you a better trader. In this video, I'm going to review a simple strategy that can help you get those flawless entry prices that can skyrocket your trading profit. And in 4 simple steps, I'll be sharing this very powerful actionable strategy with practical examples from the chart that will enable you to know how to nail those perfect entry price for your trades. Stay tuned, because by the end of this video, you'll have the confidence and the skills that you need to nail those entries like a sniper. Before we get started, take a moment to smash that like button and subscribe to this channel right away. And finally, grab a pen, grab your favorite notebook, and let's get to work. So like I said, everything I'm going to show you on this lesson will be full practical with real examples from the chart. So I know how hard it is for a lot of people to get entries. When it's time to pull the trigger, a lot of people start to have panic attacks, anxiety, and all of that. So it is actually not that hard to get the right entries for your trade, but I'll show you how to do it in just 4 simple steps. So be sure to pay good attention and also put this video on repeat as many times as possible until you master these things. And everything I'm going to show here is actually what I've used, what I've mastered, what I've been working with over the years. I also have a lot of students who are also trading with the same system I'm going to share with you for free, of course. So let's get started. So the first thing you need to know is that before you start looking out for entries on your chart, the first most important thing is to have a good directional bias in mind. Without a good directional bias, it is pointless looking for entries in the market. So you need a good directional bias that tells you that the market is about to go bullish or the market is about to go bearish. You need to have that in mind. So either bullish or bearish, you need to be able to tell the direction the market is about to go. So when you know the direction the market is about to go, the next thing is to know how to get involved in that very trade. How to get involved in that very trade. And this is where this lesson comes very handy. We are going to look at the 4 simple steps to get good entry prices for your trade, right? So let us get started with it. So be sure to mark this down somewhere very important in your notes. And then the first point on the list here is to identify a key level on the high time frame. Identify a key level on your main trend time frame. Your main trend time frame, I mean, right? So if you are looking to trade a trend on the high time frame, probably your H1 trend. If your H1 trend is what you are going to trade, then look for a key level on that H1 trend, right? So for day traders, I know you guys work with H1 a lot of times, so I'm going to use H1 for this illustration. This system also applies to all types of traders. So if you are a scalp trader, look for a key level on your scalping time frame, right? As simple as that. So looking for key level depends on the strategy that you use. So the way we look for key levels might be different from persons to persons, from trader to trader. And this is because of the system, the difference in trading system and strategy that you used to trade. So I would simply mark out a key level by looking at the previous trend and then use it and then draw it all the way to the current price, right? So in this example, I'm looking at how to get a good entry based on this move we have right here, right? Based on this move we have right here. So from this flow, we can see price gave us a bullish move of about a couple of pips. This is the H1, so this could be about 50 pips right there, or even more than that. So we are going to look at how we would have gotten a good entry into this very trade. So let's get started with that. So the first point on the list is to mark out a key level on the high time frame. Your high time frame simply means your trend time frame, right? So on this trend time frame, all I need to do is to look left and then mark out a very relevant key level and then drag it all the way to the current price. So how to do that is simply by looking at this, regard to what we have here. So this level here lines perfectly with this level over here. So this definitely is a key level I need to watch out for this time frame trade. And all we need to mark it out is just to apply a zone or a horizontal line. But I love to use the zone, so let's begin with the zone first, and then we switch all the way to the horizontal line. So this is the key level, and now we just need to draw a zone right there and then drag on across, right? As easy as that. So let's drag it all across. So this is what we want to do. And the second step also I love to use is by using the horizontal line right there. So I love to pinpoint the right candle body, right? So the exact candle body also makes a lot of difference. It makes entries very easy. So you place a horizontal line right at the candle body right there, right? The candle body you see right there, you place a horizontal line right there. So that also is very important. So when you do this, you have completed the first step, the first simple step. When you do this, you have completed the first simple step. So you would have something that looks like this. You would have what looks like this. Remember, we are looking to take a buy entry, right? We are looking to take a buy entry. So this is the first step. When you do this, when you get this correctly, you are good to go. So the second point is to switch to a low time frame. So with this type of entries we are looking at, you need to use your low time frame a lot of the time. You need to use your low time frame a lot of the time. So when you completed the first step, you switch to a low time frame. And my recommended low time frame is the M5 and the M15. Personally, I use the M5 a lot of times because of the quick informations I get on the M5. M5 prints so fast, so you get quick informations on the M5 compared to the high time frame. So when you switch to the M5, then you watch out for the same move you marked out on the M5. So right on the M5 over here, you can see what we have. This is simply how price looks like. You can see. So this is the zone, the key level we marked out on the H1, the high time frame, and this is the horizontal line from the high time frame. So you would notice what price did over here. So now let's look at the next step on the list. So right now we are on the low time frame. So what is the next step on the list? So the next step says to identify a key level on that low time frame. So the key level we are looking for here is just by applying the simple concept of trading, which is the buy low, sell high. So we want to look at how price has moved on that very low time frame. And on this low time frame, you will notice that this has been a downtrend on the low time frame. Price has been making lower lows and lower highs, moves like this, and then price finally did this. So this is the last move printed inside of that key level. And when you do this here, this simply completes the third step, which is to identify the key level on the low time frame, right? So this here becomes the key level. The low that was created here becomes the key level in this low time frame. That low becomes the key level that we are interested in. So which means we are going to use that low to pick the entry. So the next point, the final point in this case, in these steps, is to wait for reversal candlesticks or market pattern confirmation right there. So from this very low that you have printed, that you have created, right? So wait for a reversal candlestick pattern or a market pattern right inside that very low. So the first thing you will notice here is this M5 low, this very zone on the M5 is created inside of the H1 key level. The H1 key level is this full zone, right? This zone we have here, that is the H1 key level. And the M5 zone is printed right inside of the H1 key level. That is absolutely very important. So you have something like this also. When you apply the system, it should happen like this. So your M5, your low time frame low, should be created right inside of your high time frame key level, right? So when you have this, and you simply apply the fourth step, which is to look out for reversal candlestick patterns on the M5 or market patterns on the M5. So over here, the first thing you will notice here is we have a very good looking market pattern, but let us begin with the candlesticks that we have here. The first candlestick you see here is a bullish engulfing candlesticks. You can see this is a bullish engulfing candlesticks. So with this bullish engulfing candlestick alone, you can pick an entry. You are good to go. With this bullish engulfing alone, you are good to go. So price created this bullish engulfing right after creating this whole low. So after price creates a low, from a low, you can buy, right? In Forex, we buy low, we sell high. So price preset a low. So this confirms the entry for this very trade. So this is a whole trade from the high time frame. Remember, this whole bullish trade we're looking at is a trade from the H1, but we switch all the way down to the M5 just to pick that right entry spot that we need. So with this bullish engulfing confirmation, you can take your trade. You are good to go. So at the end of the day, you would have entry somewhere around here, right? So let's say for example, you missed this bullish engulfing at the time it's printed. You missed this bullish engulfing at the time it printed. Another thing you can do is to wait for the next entry opportunity. So after price printed that bullish engulfing, you will notice that price did a market pattern confirmation. We have a double bottom that got completed right there. So price created a double bottom, and from that double bottom, you have an opportunity to take entry once again. So this here is your entry. This here is your entry. So this here gives you an opportunity to get a good entry price for this trade. And with this type of entry price, by the time you switch over to the H1, you would realize that your entries are showing on the wicks of the H1 candles, at the wicks of the H1 candles. So this type of entries is going to give you a good risk to reward, minimal stop loss, and a lot more profit also. So let's switch over to the H1 and see how these entries looks like. But before we do that, let's mark this level. Let's put a line right there just to identify the entry. So our entry would be somewhere around here, right? This would be our entry. So let's mark it right there. Let's change the color of that line so it can be easily identifiable. So this would have been our entry. So now let's switch over to the H1 and look at how this trade entry would look like. So on the H1, this is what we have. So now look at what we have on the H1. This is where your entry would have been, red line. You can see your entry would have been at the red line. So with this type of entry, you would have minimal drawdown. You would have minimal drawdown and even more profit target, more profit potential. So this type of entry gives you lots of benefits. So if you're looking to take nice entries for your trades, this is the best way you can go about it. These 4 simple steps are very effective. So let's quickly look at another example. But before we look at another example, be sure to like this video, smash that like button, subscribe to this channel, and let's continue, of course, right? So let's continue. Let's delete all this. Let's clear all this out and look at a different example. So once again, on this H1 trend, right? On this H1 trend, we are looking to short from this level here, right? So we are looking to short from this level. This is the sell we are looking at. Do not forget this level here. We are looking at sells from this level. So how are we going to go about getting entry right in this very trade? So let's explain that. So the first step I explained tells you the first step is to identify a key level on the high time frame, which is your H1 trend, right? Your main trading trend. So you need to identify a key level on that trend. So this is the key level I'm looking at, the most recent low that price created in the past, right? The most recent is what you need. So you do something like this, and then you had your horizontal line, right? Okay, let me draw a zone again. You do something like this, and then, like I told you, you had a horizontal line right there. The horizontal line right at the candle body. You can see it. Right at the candle body, you place a horizontal line right there, right at the candle body. So when you do this, you are done with the first step. First step is completed. And the second step you need to do now is to go all the way to your low time frame. The low time frame that I use is M5, like I showed you earlier. So let's switch over to the M5. When you go to the M5, you are looking for the same move that we just marked out. So this is the same move that we marked out right here on the M5. So this is the same move that we marked up on the M5. And all we need to do now, which is the third step we need to do now is to mark out the key level, the relevant key level we are looking at on the M5. So this is simply by applying your buy low, sell high. So you look at the trend you have on that low time frame, and then use that to determine a good point where you may expect the next move to happen from that low time frame. So on this time frame, on this M5, you would notice that price has been doing what looks like, you would notice that price has been making what looks like a bullish trend. So we have moves like this going on, moves like this going on, and the price finally did this. Remember, we have the horizontal line right here. The horizontal line from the H1 is right here. So this will be the target for your entry, right? This will be the main target for the entry you are looking to take. So price made this bullish move, right? So we are looking to sell. So buy low, sell high. So anywhere from this region here is our sell entry level, right? Anywhere from this region is the sell entry level. So we are simply going to wait for rejections from anywhere inside of this level, and we are good to go. And right inside that level, you would notice there is a lot of rejections right there. The first rejection you would notice right there is this. The first rejection you would notice here is a bearish engulfing pattern, right? We have this very good looking bearish engulfing pattern. So when you're able to spot a reversal candlesticks or a market pattern, right? You are good to go. And over there, you have that very good looking reversal candlestick pattern, the bearish engulfing. So with that confirmation, you are good to go. This is your entry right there. This is your entry right there. So let us place a line right there, a horizontal line right there, and then look at how it's gonna look from the H1. So this here would be our entry at the close of the bearish engulfing. That would be our entry. Let's change the color. Let's make it red. And then let's clear out drawings. So that would be our entry on the M5. And then let's switch over to the H1 to look at how the entry would look like. So on the H1, what do we have? So you can see what we have on the H1. You have a very good entry. Your entry would be at the top of the candle, right at the wicks. This would be your entry on this trade. And with this entry, you stand to make a lot of profit. You stand to make a lot of profit with this type of entries. So you can see price goes all the way to this low. This goes all the way for about 400 pips. So this is actually the best way to pick out the best entry prices for your trade. If you have enjoyed this video so far, be sure to like this video and also subscribe to this channel right away. And also keep in mind, for those of you who are looking out for a more personal training from me and directly from me, be sure to check out our consultation service. We have an open consultation service, our personal service for those who are looking to really understand how to trade the right way. If you have any challenges you are also facing your trading, you may also bring it up, and then any support you may need will be provided to you. So check out our consultation service with a link in the video description as well. So that'll be it. This is simply how we get the right entries in the market. So like I told you, you need to get a directional bias first. You need to know where the market is about to go before you apply this entry strategy. So this is simply how easy it is. If you learned something so far from this video, be sure to rate this video, drop a comment so it motivates me to also keep bringing more lessons your way. For more advanced knowledge, check out our A to Z Trading Masterclass for your full access to our Ultimate Trading Mastery Mentorship Program with a link in the video description. And remember, success in trading is all about knowledge, strategy, commitment, and community. So let's keep growing together. Thanks for sticking around to this point. If you found this video helpful, don't forget to hit that like button and subscribe for more tips and strategies that will take your Forex trading to the next level. Happy trading, and I'll see you in the next one.